China and the illusion of growth. When GDP is just a fabricated number. A nation that has poured trillions of dollars into over 65 million empty apartments, enough to house a population the size of France. Thousands of kilometers of highways with no traffic. Colossal bridges spanning desolate lands, and hundreds of brand new airports virtually useless, lying silent in the night fog. Yet every year, the world watches in awe as they announce astonishing GDP growth rates. 5%, 6%, even 7%. The question is no longer, how do they do it? But, is this real growth, or merely a grand economic theatrical production, staged to sustain a fading superpower dream? Welcome to China's illusory growth economy, a place where anything can be produced, even fake prosperity. Let's peel back the curtain on one of the 21st century's biggest economic mysteries. 2. The Chinese Dream, a glimmering facade. For 3 glorious decades, China was hailed as an unprecedented economic miracle. From a backward agricultural nation, it rose to become the world's factory, building infrastructure that surpassed the imagination of many Western countries. GDP grew steadily, becoming the engine pulling the entire global economy. Industrial output topped every chart. New cities mushroomed, gleaming with lights and towering skyscrapers. But behind that shiny, glamorous facade lies a distorted, illogical, and extremely dangerous picture. A growth model not based on actual market demand, but on forced spending, pouring money into anything and everything to pad the GDP as much as possible, regardless of efficiency and reality. 3. Overproduction. When factories operate without demand. Imagine a massive steel factory built with the capacity to produce millions of tons of steel annually. But the domestic market is already saturated, not even needing half of it. Does that factory stop operating? No. It continues to run day and night. Why? Because if it stopped, local GDP would plummet. Thousands of workers would lose their jobs. Local authorities would face criticism, even dismissal. The result? China currently accounts for over 50% of global steel production. But simultaneously, steel inventory piles up, finding no buyers, rusting over time. A similar situation occurs with millions of tons of cement, aluminum, electronics, and, even more alarmingly, electric vehicles. Hundreds of thousands of brand new EVs are produced, then stacked in colossal EV graveyards, with no buyers, solely to record output for GDP. This is a non-market-driven growth model, where goods don't need to be consumed, they just need to be produced. This system has encouraged doing things for the sake of numbers, creating beautiful growth figures on paper, despite real economic efficiency and colossal wasted resources. 4. Excessive infrastructure, ghost cities, ghost airports, empty highways. Public investment has always been the backbone and primary driver of China's economic growth. But now, it's becoming a sweet trap, submerging the entire economy in debt and desolation. The clearest example is the ghost city of Ordos in Inner Mongolia. Hundreds of thousands of high-end apartments, luxurious shopping centers, modern stadiums, yet almost no residents. Only wind and dust. Or the empty airports. Dozens of brand new airports built in remote areas, only serving a few flights a day, or even none at all. Massive overpasses and modern highways connecting to empty fields, desolate farmlands. All these projects, despite generating no profit, no cash flow, and no real utilitarian value, are still accounted for as GDP growth. A meter of concrete poured, a bridge completed, even if no one uses it, still makes the economy appear to be growing. But who pays for this meaningless infrastructure? It's massive public debt. And when debt accumulates with no ability to generate profit to repay it, those beautiful GDP numbers suddenly turn into a looming financial nightmare. 5. Phantom GDP. How is growth fabricated? GDP, by its nature, measures the total value of goods and services produced in an economy. But in China, this formula has been distorted to an almost unbelievable extent. A bridge is built. It's counted in GDP. But that bridge has absolutely no traffic? No problem. it's still growth. An apartment building is constructed. Even if no one buys it, it just sits empty. It's still considered an asset and counted in GDP. The more investments poured into meaningless projects, the higher the GDP figures generated, and the more confidence is maintained that the economy is on the rise, that everything is fine. From the central government to local leaders, everyone craves impressive numbers for performance reports, regardless of the consequences, despite the waste and distortion of economic reality. In essence, China is borrowing from the future to feign prosperity in the present, building a castle of sand with phantom numbers. 6. Political pressure, an outdated growth model. So why does this illogical and dangerous growth model persist? The core reason lies in political pressure. Local officials are evaluated and promoted based on GDP growth targets. If a locality's GDP is low, leaders face criticism, even dismissal. This creates an enormous incentive to beautify figures at all costs. The state-owned banking system easily funnels capital into projects, as long as there's a project to report, without much concern for profitability or default risk. Furthermore, local governments' ownership and management of land have allowed them to raise capital by selling land use rights to real estate developers. The more they build, the more money they make. This is a self-sustaining, closed-loop growth system that perpetuates the illusion, creating phantom growth figures, reinvesting with debt, and then reporting high growth again. This cycle creates a type of zombie GDP, a number that doesn't reflect true economic vitality, but merely a reanimated corpse pumped with massive credit and inefficient projects. 7. Future consequences. Debt, bubbles, broken trust. What's hidden behind those beautiful numbers is a colossal mountain of risk, waiting to erupt. China's total debt has surpassed 300% of its GDP, significantly higher than other major economies. This is an unimaginable burden, much of which was not generated by profitable investments. Real estate accounts for over 70% of household assets, creating a massive bubble where even a small shock could wipe out millions of families. Credit has surged, but is not accompanied by a corresponding increase in real consumption or productive investment. When empty apartments become debt burdens, when abandoned infrastructure generates no profit, and when people lose faith in the economic future, that's when the bubble bursts, trust shatters, and real growth will plummet, exposing deep wounds. 8. Systemic warning and final message. China is not the only nation chasing phantom numbers. This story serves as a stern warning for any economy that prioritizes performance metrics and reported figures over true efficiency, sustainability, and market demand. An economy cannot survive and thrive sustainably by producing to appear wealthy. Currency must have real value, investments must yield returns, and growth must come from the genuine prosperity of its people and businesses. And if a nation continues to deceive itself with phantom GDP, the price to pay will be real trust, real stability, and the very real future of an entire country. If you found this video helped you see through the curtain behind the shimmering numbers of China's economy, please like, share, and subscribe so I can continue to provide straightforward, unvarnished analyses. Because economic truth needs to be revealed clearly. Because only when we truly understand how the system operates can we escape the illusions it creates and protect ourselves from potential risks.